Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Let's see. So Alexander says, so Fed hikes rates from 25 basis points to 75 basis points. Is this going to affect Roe? Yes, everything's going to affect Roe. And what Roe is going to help you understand is a couple things are going to happen. But yes, you'll be able to understand where the options should go based on changing interest rate differentials. So that's really what Roe does, the cost of money, how it helps you understand the cost of money. And the cost of money in FX options is really the cost for one currency relative to another currency. John has a question. He says that stands to reason that these options will get even more popular because of, the impending action of the CFTC, changing the margin from 100 to 1 to 10 to 1. That is a proposal, and we've had a lot of comments that have echoed John's point that if CFTC does go through, in fact, there is a comment period that's going on. If they do this, FX options will really gain traction. So you guys, the listeners now, will have a huge advantage over others because you'll really understand the Greeks and what these options do. Options are not about getting 100 to 1 or 200 to 1 or 400 to 1 or 1,000 to 1 leverage. It's not about getting the maximum leverage, because if you think about it, maximum leverage can be great if you're right, but it also can lead to massive disaster. Options allow you to select the strategy that's best for you, and only you, the trader, can decide what kind of risk reward you'd like. But again, there are lots of strategies out there, and there are some that are as simple or as low leverage as even a spread might be 1 to 1. Put up $1 to make $1. Is that a bad strategy? I don't think so, because you might have some, if you're right, that's going to make sense. It's not all about getting maximum leverage, in my humble opinion. In all my years of trading, I never felt that leverage was something that you had to have. Dan wants to know where he can get a copy of this. This will be archived at the FX Options site, so please go back and check it out. Steve says, when on TV they say that before earnings there's a certain move. Yes, there are inferred moves. So on your favorite media station, they might say, oh, this is supposed to move 4% a day, blah, 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 blah. That might be inferring that it's a 64 volatility. I don't have the time to go through that, Steve, but come back to future classes where I go through and give you the expected moves based on implied volatility. What it really means is that if volatility was around 16%, you'd be expecting a 1% move. So a 64 vol might be a 4% move, and that's based on statistics and one standard deviation moves. Let's see if I can get any other questions. Ingrid says that this helped a lot. Well, I'm glad. I mean, that's my job. My role as the Director of Education at the ISC is to offer quality education. So again, and it's always free. Jen says, very helpful. Great. Would I like to comment on the dollar? I would love to hear my opinion. My opinion is just as good as anybody else's, Jen, to be quite honest. I talked a lot about the U.S. Canadian. The way I look at it is since I've been in the option market for so many years, I look at volatility. Volatility has declined significantly in the last year. Am I predicting an increase in volatility? Not necessarily, but I watch it closely, and it helps me think about strategies. So right now we're in a very quiet period, U.S. against Canadian. And again, you might want to go back, check out that vol skew chart that I showed you, and go to live vol. They have some really cool stuff. I think it's just amazing, livevol.com, and you could see how the options market is predicting that if the U.S. dollar Canadian was to move up significantly, that volatility would increase dramatically. At least that's the prediction today. Dan says, thank you. So I appreciate the good words, Dan. Thanks. Live vol. I'll type that in. LIVEVOL.com. Livevol.com. Great website if you want to learn more about implied volatilities and options. It's just amazing. Let's see. Steve says, do days lessons affect the amount implied volatility can push? Yes. Actually, if there's just a day or two left, because if you've ever studied statistics, you know that statistics, one thing that's really important about statistics is the sample size. If the sample size is only 1 day, you might see implied volatilities that are dramatically higher than you'd ever expect because the sample size is very, very, very small. So that's what you need to sort of just understand, that the sample size might be smaller. So that's one thing you need to understand. Let's see if we have any other questions. Bruce says he was educated. He's very excited. He wanted to be educated. Bruce, I hope I did the job. I see that was an hour ago. So awesome. So Patricia has a question. So what is, let me see your question. So a 1 point move for CDD from 104 to 105, that's 100 pips. That's exactly right. Remember, we're taking that exchange rate, we multiply it by 100. So I hope that makes sense, Patricia. Steven says, there's no one touch or two touch. No, we don't have that. The SEC would not allow something like that. But thank you, Steven. We have plain vanilla options, and that's what we're offering. I'm going to give everybody another 30 seconds for any other questions. I want to remind everybody that next week's webinars, John Yeagerson on timing your FX options, entry and exit points using Fibonacci analysis. So if that's something that turns you on, Fibonacci analysis, John really does a great job. Tradingmarkets.com. Go and check out his site. Learningmarkets.com, I believe is. Learning Markets. I always get confused. Learning Markets. Learning Markets. I get confused. But anyway, John Yeagerson, FX options, entry and exit point using Fibonacci analysis. And on February 25th, Trading Central. Trend opinions. So again, Learning Markets, I believe it is. I think that's about it, guys. So I'm looking forward to your comments. I hope you enjoyed the presentation. This was a really in-depth presentation. I spent a lot of time on this one, building those charts on how the different effects of the Greeks, what it means to an options price. I'd urge you to go back, check it out. I could have probably spent an hour on each one of those, so that would have been a 4 or 5 hour webinar, which is way too long. None of us could really have withstood that. But I thank all of you for attending. Great questions today. We had a nice big crowd. So again, thanks for attending. Check out our site, fxoptions.com. Please come and listen to John Yeagerson's presentation on Fibonacci next Tuesday. Just want to thank everyone. This is Steve Meizinger, your host, and today I was the presenter. So I did both, being the host and I was also the presenter. Hope you enjoyed the presentation. On the behalf of the International Securities Exchange, this is Steve Meizinger wishing you a great trading day tomorrow. Thank you, everyone. Look forward to seeing you back at the IAC real soon.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.